today's inflation number does push out the timing. And I think, what's important for, I think, investors to kind of think about here is just how path dependent is that first cut. I mean, if it's not July, then are they not going to ease right before the election? I mean, how much of that enters their thinking? It's something to think about. The one thing I would say is that, much of the upside surprise in the core CPI number this morning was driven by medical care services inflation. And it's important to keep in mind that, there are differences of scope between the CPI data and the PCE data. And the CPI data is running, over a full percentage point higher than PCE. That's about twice, almost three times what's normal. And so, in some respects, I do think the market might be overstating how important CPI is for the Fed's reaction function, but it's a bad number, and at the margin that pushes the timing out.
Paul Sweeney, jump in here. Markets deteriorate -70 on SPX futures, Dow futures -450.
And Tom, just on the currency front, dollar yen breaches 152. We're now 152 spot
Where's
44.
Euro
yen 164 spot 37. So a little bit of weakness there. So. Neil, where's inflation coming from? I mean, I don't know. I guess we always thought that this, last 100 basis points or so of reducing inflation would probably be the toughest. Where are we seeing inflation these days?
Well, you're seeing it. You're seeing it in motor vehicle insurance. That was a big driver for inflation last month. You also saw it in apparel. So apparel prices rose quite sharply. Keep in mind, though, what I would just say is that you look at apparel prices, they rose, I think, 0.7% in March, and that's following a big increase in February. But taking a step back, people are already making a trade-off, right? So if you look at real consumption of clothing, it's already declining. So in some respects, that is not the kind of inflation the Fed should be worried about. That's not demand-driven inflation. If people are cutting back in the areas that are going up in price, that suggests that people are making a trade-off already, and they're somewhat resistant to higher prices, which then raises the question about how long those price increases can stick. Motor vehicle insurance, it was going in the right direction. It was still very elevated, but it was going in the right direction for the last few months, and now it's reversing. But we did see things like car prices come down, so I'm not really sure what to make of that. Ultimately, if the underlying value of the asset itself, which is cars, is going down in price, you'd expect, the insurance cost.
Okay, I want to go to